What's going on, guys? I'm Tanner. This is my partner Joe, and we own Simple Start Homes. And today we just wanted to talk a little bit about owner financing, what it is and how it works. So what is owner financing? How does it work?
Great question. Owner financing is when somebody who owns the home already decides that they want to receive the purchase of the home in installments. So they can, let's say you own a property, $300,000 property, you can turn around and if somebody wants to buy that from you but doesn't have $300,000 or can't get approved for a bank loan, the owner can, say, hey, if you give me 10% down, $30,000 down, I will actually finance you the rest of the purchase at some interest rate for 30 years, fixed interest, no prepayment penalties or balloons. You can obviously put a balloon in there or a prepayment penalty, but typically with Simple Start Homes, our loans are 30-year fixed interest, no prepayment penalty, no balloon, and you don't have to go through a bank because we already own these homes or are in the process of closing on the home when we're marketing them to be owner financed.
So how do you know who you're working with is actually legit, you're not getting scammed?
Sure.
Because that's a common question that people ask.
Well, the nice thing about owner financing is you're going to be closing usually with a title company or with an attorney. So you're actually going to have a third party governing the transaction that isn't representing exclusively the buyer or seller.
So you're not saying don't just go wire funds to just
you don't want to just
individuals.
Yeah, you don't want to just wire funds. There may be situations where that is necessary, where there's not a title company or attorney that will close the transaction. You can still get a closing company or a transactional coordinator to write the paperwork, write the mortgage documents, underwrite the buyer, to make sure that they can actually make the payments. So the process to owner finance a home involves a lot of different steps. Someone could want to do it, someone could have a down payment, but they have to also be able to afford the monthly payment. And there's a third party that usually oversees that side of the transaction and makes sure that the buyer who's purchasing the home actually has the income to be able to repay that loan. So there's actually a lot of moving parts. If you're jumping into something and none of those things are part of the transaction and you're trying to live in the home, then you might want to second guess what you're doing. At Simple Start Homes, we typically will have a third party underwrite the buyer and then to make sure they can actually make the payment, because we don't want to predatorily lend to individuals. And then we also will have typically a third party, like a title company or attorney, that's actually drafting the paperwork, or at least a transaction coordinator who's drafting the paperwork and the mortgage docs and getting everything signed and notarized and ultimately recorded with the county. So if you're not seeing those things, then you might want to steer clear or at least figure out what exactly is happening and maybe learn more about the seller. Maybe they just don't know the whole process very well. And maybe they should talk to Simple Start Homes, to us, and we can help them actually make sure that they owner finance it correctly to you.
Nice. So how would a seller benefit from doing, why would they even do this in general? Why wouldn't they just go list it on the open market and
Amazing question.
be done with it?
For the seller side.
Yeah, for the seller. Why
Yes.
would the seller offer owner financing?
Well, the seller might want to offer owner financing for a lot of reasons. But one is they don't need the money. They would rather get more money for the home and receive it over time. And at Simple Start Homes, we're in it for the long haul. We would rather receive payments in a lot of cases than all our money up front for the property. Typically that comes with the benefits of being able to sell for a higher price, because our buyer pool just increased a lot because we'll accept people who have bad or no credit, who are self-employed, who are on an ITIN, not a social. We'll accept people like that, which means that the buyer pool just doubled of the people who can actually purchase your home, because we don't have to go through a bank. So by increasing your buyer pool, you can get more for the property, and while you're not getting a lot up front, you can receive payments and then receive those payments over a 30-year period if they take it to full term and don't refinance or something.
Sweet. So let's say I wanted to purchase a home from you right now that you're offering owner financing here in Phoenix. How would that process work? Do you need to see my credit? Do you need me to show bank statements? Do I need to be a U.S. citizen? What do I all need to provide to qualify?
Well, you don't need to be a U.S. citizen actually. I would, we're not even gonna look at citizenship exactly. Hopefully you're legal, but we will look at bank statements or last 2 years of tax returns. We don't actually do the underwriting. We typically have a third party underwrite the borrower. So we aren't even involved in the underwriting process. If you go view a home, you like the home, you're ready to buy it, you've got the down payment that's needed to get into the home, and you can afford the monthly payments, then the underwriter is actually gonna ask you for either 12 months bank statements or last 2 years tax return. They're also gonna check your credit, not because they're gonna be looking at your credit score, but because they wanna see what kind of debts you pay on a recurring basis each month. If your debt to income is good enough, and the way they do that is they take 12 months of bank statements and they add up all your deposits and then they divide it by 12. And let's say you're making 10K a month and you have 2K a month in monthly liabilities, car payments, credit cards, personal loan, whatever, then they would factor that in and get your debt to income, and then they would add the mortgage payment that you're going to be paying on the home. And as long as that number is below, I think it's like 52 to 58% of your debt to income, then you're going to get approved for the home, and they'll actually write the loan for you and originate it, and you're in the house. So your credit doesn't have to be good. You don't have to be a citizen. You could not report barely any of your income on your taxes. I've had a lot of truckers buy homes from me because they make incredible money, but they're writing off so many expenses because they've got a truck and they've got inventory. They're paying for all these things. So they might not show great income, but they might be an incredible borrower. One trucker I sold a home to, he had an amazing credit score even, but he still couldn't get a bank loan because he wrote off so much of his income. Which, now that we're on the topic, I bought my home with owner financing because I don't report all of my income. Or I report my income, but I have a lot of write-offs. And because of that, I can't even get a bank loan. But I can certainly buy a home with owner financing, and I might even be a better borrower than somebody who can get approved for a bank loan. So that's kind of the perk for people who want to buy a home with owner financing. And not to mention, there's nothing that will hold you back from being approved for this. As long as you have the income and the down payment, all those other qualifiers that the bank's gonna look at doesn't even matter.
Nice. That was going to be my next question. What are some of the benefits? But it sounds like you kind of already hit on some of those.
Yeah.
So you're not going to have to, there's no banks involved, right?
No banks involved at all.
You're not going to have to you're going to check my credit, but that's more so just to see my debt to income.
Your liabilities, yes.
Nice.
We are required to verify certain things so that we aren't predatorily lending.
So what are some of the risks involved for both, I guess, for the buyer and the seller?
Yeah. Well, risks for the seller are they could default, and then you have to try to recoup the property somehow. I've had people default before, and we actually didn't have to recoup the property or anything. We just modified their loan. They just needed a little bit of help. So I've done that before, but sometimes people won't work with you, and then you have to go through a more legal process to actually get them out of the house. We prefer to just work with people, either do a deed in lieu so we don't have to foreclose, or modify the loan or something like that if it was just a simple hardship. But the risks for the buyer are just that if they don't make the payments, then obviously they have to be responsible for doing that. Other than that, as long as you are structured appropriately with usually a third-party underwriter, an attorney or title company, then there's not many risks that can come with a purchase like this. It's going to be the same as if you buy from a bank.
So you said you don't check my credit. If I bought a home owner finance, will it report to my credit?
It does not have to. If you really want it to, for benefits of obviously your own credit being built, you can definitely do that. However, you don't have to have a report, and then you don't have to get screwed over if you do miss payments or have to do a deed in lieu of foreclosure. As long as you're willing to work with us, we're not gonna necessarily report it.
I had a few more questions, then we'll wrap this video up. So is owner financing the same as rent to own?
No, not at least the way we're defining the terms. Rent to own and lease option are synonymous when we're using those. So what that is you purchase an option agreement for about a 5-year time period, where during that 5 years you would rent while you work towards getting permanent financing, either through owner financing if you need to just bring more down payment and you need some time to get it, or with a traditional lender, and you just need to fix credit or employment history or something like that. Owner financing is you've got enough down right now to own it, and you've got enough income to be able to afford the payment, and the underwriter will approve you, and your debt to income's at a reasonable level, and you would just get ownership right away. And then you would just pay a mortgage, and all the down payment would go towards your pay down on the principal, and all your monthly payments would have some sort of pay down as well. Interest rates are crazy right now with traditional banks. You know, it's mid-7s if you have an incredible credit score. So if you can't even get approved for a regular home loan, sometimes you can still right now get a better interest rate by using owner financing than you would get even from a bank. So interest rates vary. They can be more than what current rates are at, or they can be less sometimes than where current rates are at. It just kind of depends on the property. Either way, it's way better than renting. So even if you're paying 10% interest, that's better than paying 100% and renting and having your landlord be able to go and sell the property whenever they want, or raise your rent, or do whatever.
You know what's crazy? What I actually just thought of, what I saw the other day, was they're actually incentivizing if you go get a traditional mortgage, they're actually incentivizing people that have lower credit scores to go get mortgages. They'll get a lower down payment.
That's right.
If you have a higher credit score and good credit and everything, you'll actually have to pay a higher down payment.
So if you're somebody who is in the market to buy a home and you've got a solid down payment and you have great credit, give us a call. We might have something for you that will give you an even better rate than what you'll get from a regular lender. And same terms, 30-year usually, fixed interest, no prepayment penalties, no balloons on most of them. Some of them might have some changes to it, depending on what is going on with the property. But yeah, I mean, I guess in this climate, even if you aren't a penalty box buyer and you don't have any problems with getting a bank loan, this might be a route that you want to explore anyways, because it's better and cheaper.
Exactly. So. I guess my last question is owner financing legal in general, or is there any states or any places where it's not legal?
Owner financing is super legal. If there's states where you can buy a home with a mortgage, then all the same states you can buy a home with owner financing. So there's rules that we have to follow based on what kind of buyer we're using, if it's an investor or someone who's going to occupy the home as a primary residence. Other than that, on the side of the actual buyer, they're going to go through the process the same as with a regular lender. Everything's going to be the same foreclosure laws govern owner financing that would govern a regular bank.
You brought something up there, so that was actually one of my other questions. Last question. So if I was an investor, could I buy properties from you too, or
Yes.
is it like a traditional like FHA where I'd have to be in there for a year before I could go rent it out or do Airbnb or something like that?
One of the nice things about owner financing and with working with a company that is owner financing properties like Simple Start Homes is if you bring more down, we can be flexible with your interest rate and your payment in some cases. Every property is different, as you're probably realizing from the video, but there's investors I'm talking to right now that want to purchase a home from us and they have a great amount down. They're going to be able to get a rate far below by like 3 or 4 points than what they could get in the market today. So yes, if we are extremely flexible, investors can buy from us for long-term rentals, for depreciation, for whatever, the same as a borrower who wants to live in the home.